Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. Today is Monday, August 9th, 2021. It is the first day of trading week number 32. What I would like to do is turn around my last 2 months of trading. Options has been really not going in my favor because the market has been generally one direction and everything has been going up. There's a lot of new all-time highs in the last 2 months. While that is good for my 401k plan, and I'm not complaining there, for my options trading, it actually went sort of against me. And so that's one of the things that I want to try to do is adjust some of my strategy. And sometimes it does take about 3 to 4 weeks to play out. So the moves that I'm doing in the last week or two, I'll still feel some of the pain. Doesn't mean I'm out of it. And the only other risk is, let's say markets correct. If markets drop 8 or 9 or 10% and it does a sharp correction, then I'm still not out of the problem because I'm using iron condors. So I do play both the call side and the put side. So the strategy I'm using requires the market to sort of stay relatively flat. So today I want to talk about what happened last week. I want to talk about one trade about Fastly, and I want to talk about the details of how much I made, what I did, and how I end up playing it, and what happened so far this week. But before I do so, I want to remind you that I do run a Facebook group, or you can find me on Facebook group. On one of them is Investing 102. You can find me here, and here's the URL, or you can just search for Investing 102 and look for something like this. So let's get right into Fastly, and let's talk about what happened since last week. Today is looking really good. It's up 4%. I'm going to show you a 5-day chart so you can see what's happening. Fastly was relatively flat going into earnings, and you can see what happened here from $44. It took a dip all the way to $34, and it was very short-lived. It sort of rebounded on that one day, and it was still under 39, and then come Friday, it was rebounding. It went up, and then look, you see this trend here. So how did I play that? So I'm going to show you my E-Trade transactions for Fastly. And I want you to start over here, and I'll explain what I end up doing. And I'll start here because I don't want to talk about all the existing positions because I had other positions. So on Thursday, I want to talk about what happened during a live option training Zoom meeting. One of the coaches that I work with, we were talking about Fastly, and we were just talking about sort of what happened here and how I should play it. One of the things that I had to do was I have two different covered calls, and one of them was for like a $56, and I think the other one for $60. And what I end up doing with those covered calls were, because Fastly went all the way down to 35, I end up rolling them closer to the market price. So I'm rolling the strike price down, and I even believe on one of them I rolled it in time. So instead of letting it be 4 or 5 weeks out in the future, I actually shortened it up, collected more premium, and that's how I end up playing it. But really what ended up happening during that call was one of the coaches said, well, do you think it's going to stay at 35? And I said, I don't know. I think the bottom is in. So what we ended up doing was I did a cash secure put, and I think that was already up here, and I did a cash secure put for $35 strike price, and I collected 60 some odd cents in premium, and I'll show you that right now. And that ended up being this trade here. I collected 63 cents for a 1 day of risk for $35 put. And here's the details of that. You can see it was done at 10:31 a.m. Eastern Standard Time. And what this is saying is, for 1 day of risk, I am willing to buy 100 more shares at $35 strike price, and I collected 63 cents for it. At the time I did it, I think it was at $36 and change, and the stock was trending upward. So at 10:31, let's see where it is. You can sort of, right here, you see that? You can sort of see the price. It was at $36, and it was already uptrending. And you can see that. You can see it based on this chart here. So here's if you do it this way, it's probably easier to see, right? So this is the option, right? This is the share. So you can view it as a matrix if you want. So if you do the math here, this is truly what happens. I put up $3,500 because I did a cash secure put. I collected the $63 minus some commissions and fees, so I used 62. So here's the rate of return on your investment for one day. Now there are many ways to calculate this. Most people can say, well, that's the true rate of return per that one trade, right? Either this number. If you want to analyze it, most people just multiply that by, well, if you're going to analyze it, you got to do it by daily, because this is a 1 day, and this is what numbers you will get if you did it daily. Now, options cannot trade daily. On Monday, you generally can't open a trade that ends on Tuesday, and so forth. You can't open a trade that ends every day of the year. So sometimes that's a very misleading indicator of what you can do with your money. So what some people do is they use this concept of, well, can you duplicate that strategy weekly? And the answer is yes. If the stock has weeklies, and this one does, you can do it weekly. So if you use a weekly number, my rate of return, even for that one trade, was a 92% rate of return because I made $62 putting this much capital. I can tell you my bank will not give me $62 of interest even if I put $10,000 in there. So this is a really good rate of return. What I like to do is something even more conservative than the weeklies, because you're not going to duplicate that success every week, because that implies a 100% statistical probability that your trade will always go in your favor. So if you factor in some weeks where you're not going to win or break even or lose money, so I use a different factor. I normally use like a factor of 40 instead of the 52 weeks. So that gives you a little bit of buffer. So even if I use this lower amount, I made a 70% rate of return on my bet for this particular cash secure put. So the question now is, what should I do? Once I made money on this, what should I do? Because I already collected the $63. And then on Friday, you see this? On Friday, it was also uptrending. It actually broke above 40. I remember my contracts were for 35. And look at this trend. It's going 41, 40. You can see that it was above 40. So what do you think I end up doing? And what you need to do is look through my transaction history for another one with an August 635. And it's not this one. There's no August 635 in here. And it is over here. So let me show you what happened next. So you got to follow this trade. And look at the time. The time on this trade now is at 150. So let me show you what happened at 150. So on the same day at 150, which is right here, you see the price? It was at 41.65. I knew that my $35 strike price, unless it was going to drop the next day, I'm pretty sure I made money in the stock. And that option contract was worthless. And I'll show you that real quick. When I actually end up rolling this, so you see what I did? I actually end up rolling this cash secure put. I close out my $35 one, and it cost me $9 to close. And I open a new one for $40 cash secure put, and I collected 72 cents for that. So the net difference was another $63. So on the same day, I did another move. So I opened my position here. Stock ran up, and at 150, I end up moving my strike price up $5. Now, I didn't have a lot of choices. So I end up moving it. I end up moving it up, and that's what I did. I collected another premium on that day. So you can see that. And it had the same expiration for one more day. So let me show you what that looked like in the spreadsheet. So you can see here, I just put in the spreadsheet, closed it for $9, opened another one for 72 for the net difference of $63 again. The only difference now is I need to back this trade with $4,000. And so my percentages are dropping. But on the same day, this is already profit minus the 9. Or you don't want to count the 9 cents twice, you see, because this is the one transaction. The 9 cents is already factored in here because it's 72 minus the 9 equals 63. So what do you think happened next? So I collected more premium for this one trade 2 times on Thursday. Okay, so now what happens on a Friday? On a Friday, the market opens up, then it drops slightly, and it dips to $40. And look at this. It dips under 40 for a little bit in the day. So at that point was the only risk. Outside of that, it moves up. And I'll show you what I end up doing, which is this trade here. On Friday, I end up closing it, and you see how much I could have closed my trade for 3 cents, which you see over here. So here is Fastly, and you can see I have 200 shares. I do have other cover calls and other positions. I'm not going to talk about that. I want to talk about what I did with the cash secure put, and you can see here's the value. Even with 4 more days left, you see that this is 60. Oh, so when I rolled it, I got $59 for it, close to 60. And you see 2/3 of the value has already evaporated. And at some point, it doesn't make sense for me to wait till Friday to close this position. So what that means is, and it costs her Thursday, Friday, and Monday, if I close it out, you can add up all the money I made. Now, does all that money that I made make up for all this losses? And the answer is no. And this is why I constantly play it. I rolled these down. Remember that? I had one at $60. I had one at something higher. I rolled it down for more premium. And that's what I was saying. I added some additional risk on purpose. Because sometimes your shares, right? If you're losing money on a cover call, then the key is you still got to make money in your options. And the hard part is you got to be careful. If you keep on rolling these things down too far, you don't want to give up your shares less than what you were willing to pay for it, right? My cost basis is 60 for the share that I already own. So my put option done really well. In the last day or so, I already made $120 on the $4,000 of risk. Now, what that means is these, because I've been in this trade longer, these are not doing so well. But I have a spreadsheet where I track it so I know how much money I'm making on Fastly. And back to this chart, you see I've been playing Fastly for a while. It goes up, it hit $120. It goes down, it goes back up. I probably rebought back in somewhere around here. And then I bought back in somewhere around here. I had 100 shares somewhere around here. Then I bought back in 100 shares somewhere around here. And then obviously the bad earnings was bad. So I'm replaying it back. I don't know when it will recover. But at some point, all I'm doing is I'm just playing the recovery. And I added 100 shares when it dropped, added another 100 shares when it dropped, then I added a cash secure put. So if that put was assigned to me, I'll have another 100 shares and I'll play it for the rebound. So that's what I'm doing. Hopefully this will help you out in some of the ways that option traders use different strategies along with their cover call strategy, along with a buy and hold strategy. So this is really sort of like a concept of the wheel strategy. I don't really do the wheel, but I do something close enough where there are times where if I like something, I do use cash secure puts and collect premium. And if it gets assigned to you, you enter the position again. So that is the wheel strategy. But I don't really think of my strategy as using the wheel. But for those of you who understand it, you will say, hey, that's close enough. That's why people like doing the wheel. I like it. Nothing wrong with it. But hopefully you can see what I end up doing with Fastly. The premiums are really good, and I'll make more money on some of these short weekly plays. And then my cover calls, we'll see what happens. If this thing blasts back up to $60 relatively short, I'll lose money on the cover calls. If it just moves up slowly and moderately, I will eventually be able to roll each of my cover calls for more premium each time. With that being said, give me a comment below. Let me know if you understand it. Let me know if you need me to explain that further. And if not, hey, let's do this together. Let's do this $1 at a time. As always, have a profitable day. Bye-bye.